Euro USD trade review. This is Friday 18th of July. So we're going to the 4-hour time frame. Okay, so going to the 4-hour time frame. We had these two candles here. We had what do I want? We had this candle here and this one. Let me see if I can use we had this candle here and this one here. So this one opens, forms a high, forms a low and closes. Then the second 4-hour candle opens, forms a high, forms a low and closes within the range of the first candle, the first 4-hour candle. So typical CRT traders would have used this to predict price would go higher as it has done, like this. We will just adjust this. So typical CRT traders would come to the 15-minute time frame to find that entry. So we had this low, a high, a low that swept this. You can see this massive wick that swept this previous low, and then find a change in state of delivery to go higher. So we had a change in state of delivery right there. We can see there was an inverted fair value gap right there. And then a retest of the fair value gap, a bullish engulfing candle of this inverted fair value gap, which would now mean price is going to go higher. So a typical entry would be maybe at this point, at the close of this candle. And then stop loss there and take profit at this previous high right there, which gives, let me use this, which gives a risk to reward ratio of 1.74, or maybe they will target higher these highs or these highs, which will give maybe 3.32, and this one would give 2.54 risk to reward ratio. However, I have a different approach to this, so I will delete everything, and to go back to the 4-hour time frame. So this is our first candle, which will give us the CRT range, or the CRT range as CRT traders call it. And then this is the candle that swept this low and closed in this range. Okay, so instead of trying to find entries on this candle, I will use this candle as a dealing range. If you are an ICT trader, you know what a dealing range is. So I'll mark the high to the low of this place, and then find the midpoint of this right there. You can see that midpoint, the 0.5 of this dealing range, and then this becomes our discount. Okay, so I just delete this. So this becomes our discount. So even without going anywhere, you'll notice this candle gave us a dealing range. The next 4-hour candle opens and taps into this discount and then moves higher. So I'm expecting this our dealing range candle that gave us the dealing range, our discount zone. I'm expecting an entry on this new on this 4-hour candle open right here. So I'll just maybe put it right there, and then we drop to the 15-minute time frame, and you can see what is happening. So what is happening here is this is where that 4-hour candle closed and a new 4-hour candle opened. We are expecting price would trade above this discount zone and then come back into the discount and then trade above it, go above it, and continue going higher as it has done. So we will go to the lower time frame. First of all, we want to know if the price is currently trading above the discount. What would make it want to come back into the discount zone the way it has done? So there's no significant reason why price would want to come back. Maybe you can mark this inverted fair value gap right there. I'll go to the lower time frame and see if there is a finer reason or why price will want to go into this zone. And yes, so in the 5-minute time frame we have a better inverted fair value gap. You can see it right here. So this inverted fair value gap, let me give it a different color. You will notice the midpoint of this inverted fair value gap is at the same level as the 50% of our dealing range, which is this area right here. So I am expecting price would trade above and then come into this inverted fair value gap, which is also inside this discount zone, and then push higher the way it has done. So since we have identified our dealing range, our discount zone and our inverted fair value gap, as price is still trading above here, we will set a pending order, a buy limit right there. At the midpoint of this inverted fair value gap, which is inside the discount zone. Now, how do we set our stop loss? Since we have this change in state of delivery, we do not expect price to go lower than this point. Okay, I do not expect price to go lower than here, this point. So this becomes my stop loss. This area becomes my stop loss. Okay, so and how do we take our profit? Our take profit will be at this previous high. If you remember the CRT traders, the entry model for the CRT traders, this high gave us around 2 point something R, but now you will see it is giving us 4.54 R. Or you can choose to go for these equal highs right here. If you go for these equal highs, the CRT traders, that entry model gave us around 3 R, but this one is giving us 6.12. And this is how I plotted this setup. So my standard risk to reward is 4 for this specific entry model or this specific approach. My standard risk to reward is 4RR. However, we are expecting price to push even higher. So at this point, actually, I've already exited. You can see it reached higher. But we are expecting this price to push even higher to these highs, because relative equal highs right there, which will give 4.62, and then these highs right here, relative equal highs, which will give 6.06, and then maybe these highs here, which are also relative equal highs, which would give 7.5 R. And if you're willing to wait over the weekend, because this is Friday, this trade might hold over the weekend, you can hold and target those highs, which I think those are the weekly highs. Yeah, those are the highest point of this week. So next week price might trade up to this point. So if you're willing to wait for that long, this would be 13.68 R, and that is how I would approach this model. So ideally this is a combination of CRTs or Romeo's CRT range and ICT's dealing range. This is quite a new approach for me. I'm still forward testing it. I've done a bit of back testing around 3 months, and I've seen some really impressive results. So I'm still front testing it and see what it does. And that's it for this review. Until next time.